Good afternoon, Ms. Shania and Ms. Diana. We want to present our paper. The title is Indonesia Stock Price Behavior in Banking and Energy Sectors, a Machine Learning Approach to Dividend Analysis. Our group member is Vincentius Jacob Gunawan, Frederick Malcolm, and Rizky Fadilah. Next. And we submit on ICICOS 2025, International Conference on Informatics and Computational Science. And our affiliation is Binus University School of Computer Science. And our table of content is Introduction, Literature Review, Methodology, Result, and Conclusion. Next. In introduction, first, our stock market overview. The stock market is popular investment venue globally, broadly divided into two segments. Is IPO market, where companies first offer shares to the public to raise capital, and secondary market, where previously issued shares are traded among investors. Next, stock price fluctuation. Stock price volatility is common and influenced by various factors, including market sentiment, company financial, and corporate actions like dividend payouts. Next, sector impact in Indonesia. In Indonesia, the banking sector is typically stable and influenced by interest rates, while the energy sector is more volatile, driven by global commodity price. And next, traditional versus machine learning analysis. Traditional stock analysis relies on manual methods like financial ratio, while can struggle with complex patterns and large datasets. Machine learning can process large datasets, detect hidden patterns, and improve accuracy over time. Next, our research focus. This research uses historical stock data from TradingView to analyze the Indonesia banking and energy sector. We compare price volatility, dividend payments, and external influence like interest rates and commodity price during key dividend periods. Our goal is to enhance investment strategy in Indonesia capital market. And next, literature review. Our literature review, we discuss traditional stock analysis often falls short in capturing complex market dynamics. Machine learning significantly enhances stock price prediction by processing large data sets and identifying hidden patterns. And next, our machine learning models. We use XGBoost, a powerful gradient boosting algorithm known for its speed, efficiency, and feature selection, making it effective for financial forecasting. And next, we use Random Forest, an ensemble model that is begging to improve reliability and reduce overfitting, ideal for understanding complex financial data relationships. And next, studies on dividend-related stock price behavior in Indonesia. We found that dividend announcements significantly impact stock price on the ex-dividend date, supporting dividend signaling theory. And next, studies on machine learning in stock price forecasting. Compared various machine learning models for predicting the LQ45 index with neural networks showing the highest accuracy, and evaluate machine learning models for predicting stock market trends, suggesting that hybrid or optimized approach lead to more reliable predictions. Next.
Okay, so next we're gonna discuss about our methodology. And for the first point will be data collection. We're gonna use two main sources as our data collection, where we use TradingView to obtain the price data set and stock bid for dividend data. And the companies we're gonna compare would be from the banking sector and the energy sector, where banking sector consists of BCA, BBRI, BBMRI, BBNI, dan Megang Bank. And for the energy sector, we're gonna use Agro, Bian, GEMS, and Pegas and Accra. For time period data sets, we will be taking it from 2015 to 2025. And for the dividend data sets, it will consist of cum date, ex date, and the dividend payout. Next. Okay, so next, the second point would be data preprocessing, where if there are any missing data, we're gonna handle it and then merge all data sets into one data frame with features. And another thing we will do would be feature engineering, where we're gonna add more column, for example, calculating price change between cum date and ex date, then dividend yield and encode sector as categorical, where banking as one and energy as zero. Next. Okay, for the third point would be the model selection. We use two main model. The first one will be random forest, where it combine multiple decision trees for more stable and accurate results, and where it is great for understanding which features are most important in prediction. And for the second model, we're gonna use XGBoost, which is widely known in the finance world, where it has a high predictive power, especially with complex data sets, and it is also working well even when data contains missing values. Next. Okay, for model training and evaluation. Okay, for train and test split, we're gonna do 80 and 20% splitting, where training data set will be taking from 2015 to 2022, then testing data set will be 2023 to 2025. And for the evaluation metrics, we're gonna use four different metrics. For the first, R squared, the second, MAE or mean absolute errors. For the third, root mean squared error, and the fourth, coefficient of variation. Okay, next.
All
Okay.
right. So as for the results, first let's look at our data. As you can see, the dividend yields for banking and energy sectors, the energy stocks fluctuate significantly with lots of sharp peaks and drops. Well, if you take a look at the left side, it's the banking stocks, which we can assume that banking stocks is more stable than the energy stocks. While this volatility makes normal prediction difficult, which is why we turn to machine learning to find a model that could handle these complex patterns. All right, so which model performed best? We tested random forest against XGBoost, and the result in this table are clear. That random forest was much more accurate with a higher R-squared score of 0.937, which basically tells us how well the model's predictions fit the real data and lower errors. However, XGBoost showed a better score on the cross-validation root mean squared error with a value of 0.0224 This metric is like a stress test that shows how well the model might perform on a new, unseen data in the future. All right, so this also tells us that while random forest is more accurate on our data, XGBoost might be slightly better at generalizing to new data in the future. And for this project, we can conclude that random forest is the better model overall, but XGBoost is a strong alternative if generalization is the absolute priority. So, why was random forest so effective? We can take a look in this slide that we check the feature importance, and the answer is undeniable. The single most critical factor is the dividend to price ratio. As you can see, the importance score of 1.73 massively outweighs to every other variable. And then, as you can see on the slide that we offer practical benefits for investor and investment strategies. Beyond the technical results, our model has clear practical benefits. It provides investors with a tool for more accurate predictions, which leads to improved decision making, better risk mitigation, and more effective portfolio optimization. To conclude, our work has three key insights. The first one is that random forest model can predict dividend yields with very high accuracy. The second one, these predictions are driven by the stock's current dividend to price ratio variable as the most important feature. And finally, this paper also provides a powerful data-driven tool to help investors make smarter and more strategic decisions in the market. So that's it from us. Thank you for listening.